Hey guys, welcome back to Stacking Stocks as we evaluate the situation at Tesla. Following the strong fourth quarter deliveries and 2021 as a whole, there's been a lot of excitement about the stock. A lot of people now believe that Tesla is unstoppable. Well, let's find out. So, major Tesla investor Ron Barron told CNBC that he's made $6 billion on his investment in the electric automaker and plans to remain a shareholder for at least another 10 years. Back in March 2021, Barron predicted Tesla stock would reach a price of $2,000 per share over the next 10 years and would be $1,500 by 2024. Despite the predictions, Barron sold 1.8 million Tesla shares for his firm's clients in that month, a move he called painful but necessary for risk mitigation. Barron, whose firm sold another 41,000 shares of Tesla in October 2021, remains extremely bullish on the stock, calling Musk a hard-working, inspiring, and brilliant guy. Barron says that when he first met Elon Musk 10 years ago, he was skeptical about whether it would be successful, and it's only after they started producing the Model S that he began to purchase stock. The longtime Tesla investor is also excited about Elon Musk's SpaceX venture, which has since hit over $100 billion in valuation. Barron suggested that most people wouldn't be as curious about space without the mega billionaire and that the U.S. government should be more appreciative of Musk's contributions. There wouldn't be electric cars were it not for Elon Musk. In fact, people probably wouldn't be into space the way they are right now if it weren't for Elon Musk. Barron made these remarks around his criticism of the billionaire's tax unveiled by Democrats. Following that, Elon Musk had to sell about 10% of his shares to cater for taxes. But the question is, what is Elon planning to do with the billions he's collected in the past 2 months from selling shares in Tesla? It seems possible, maybe even likely, that he's put at least some of the money into SpaceX. Most of the proceeds from his Tesla stock sales will go to pay an estimated $11 billion federal tax bill, leaving him with a lot more to do with whatever he sees fit. Even if he ends up paying $2 billion in additional income tax to the state of California, where Tesla was based for most of the year when he was granted the options on which he will now owe taxes, Musk will still be left with a lot of money. And his recent moves of both his own residence and Tesla's corporate headquarters to Texas, with its zero state income tax, makes it unlikely he'll have to pay the maximum possible tax to California. Perhaps more telling, some footnotes in the filing disclosing details of the sales, along with the timing of the last two equity infusions into SpaceX, raise the possibility that Musk is shifting some of his wealth from publicly traded Tesla into shares of his privately held company, SpaceX. Those trades are unique for Musk, the nation's highest-profile CEO. It's the first time in the 12 years that Tesla has been public that he's held on to cash from the sale of that company's shares rather than selling only enough stock to pay looming tax bills. His timing is good as the sales free up cash at a time when Tesla is doing very well in the market, becoming the sixth company in history to be worth $1 trillion, and lifting Musk himself to the status of the richest person on the planet. And it's being done at a time when his other high-profile company, SpaceX, is out in the market raising hundreds of millions in cash to fund its ambitious goals. Those two facts, along with details disclosed in the various filings, certainly raise the possibility that he's pumping money into SpaceX. Now, Musk sold 10.3 million of the shares on the same days he exercised options to buy an additional 22.9 million shares of Tesla stock. The sale took place on 11 separate days spread out from November 8th through December 28th. Those options had been due to expire on August 13, 2022, so it made sense for him to use them to buy the shares. But once he did so, the value of the shares, less the modest exercise price, became taxable income. Musk sold shares immediately after exercising the options, with the SEC filing noting that the transactions were made solely to satisfy the reporting person's tax withholding obligations related to the exercise of stock options. But not all of them. The most recent sales, including the notation that 219,000 shares that were sold on December 28th were solely to cover his tax bill. Another 715,000 shares he sold that same day, which netted Musk $776 million, went partially to satisfy his tax bill, according to the filing. The next day, SpaceX made its own filing with the SEC, disclosing that it had raised $337.4 million in new equity investments from an undisclosed investor. And this isn't the first time this year that a Musk sale of Tesla shares for purposes other than paying taxes was closely followed by SpaceX reporting a new infusion of equity investment. From November 9th through the 11th, Musk sold 5.4 million shares, raising $5.8 billion. Those were shares he held in a trust, not shares he had just acquired as part of the exercise of options. And while his tax bill is likely much smaller on the sale of those shares, it's still substantial, about $1.2 billion in federal long-term capital gains taxes, leaving him with about $4.6 billion. There's no indication in the filings as to why he completed those sales, which marked the first time that he's sold shares that he's held for an extended period rather than those he just acquired through the exercise of options. It could be because he wanted to follow the outcome of a Twitter poll in which he asked followers if he should sell 10% of his stake in order to increase his taxable income. But it's equally possible that the motivation was to provide much-needed cash for SpaceX. On November 15th, a few days after he made that usual sale of shares from his trust, SpaceX disclosed it had raised $388 million in additional equity investments from an undisclosed investor. Well, what's outstanding is how far Tesla has come. The figures tell it all. We can see the valuation of the shares Elon Musk has sold in the past. Expectations are running high ahead of Tesla earnings in the coming days. The company is on strong footing for its fourth quarter 2021 earnings call on January 26th. It's weathered the pandemic successfully by pivoting its production capabilities to overcome the automobile industry's chip shortage. The carmaker also opened 2 new factories and reported record deliveries for its electric vehicles. To top it all off, Tesla was the best-selling electric vehicle brand in Europe in 2021. Appropriately enough, analysts are predicting a great performance. Tesla's stock price skyrocketed during the pandemic on the back of record deliveries and a policy push by the current administration to promote electric vehicles. While the stock's trajectory lost some steam last year, most analysts still expect it to push higher. Credit Suisse analyst Dan Levy expects Tesla to beat street expectations and recently raised his price target for the company's shares to $1,025 from $830. There are 4 strategic factors that look to massively impact Tesla's growth: an increase in production capacity, gross profit margins, new batteries, and production announcements will influence Tesla's stock's future growth trajectory. The company is looking good on all 4 fronts currently, with new factories set to start production and novel battery chemistries in development. Its operating margin, already the highest among EV manufacturers, should further improve with volume production taking off. It's important to remember that analyst assessments of Tesla's business assume an increased market share for the company as EVs take off. That may not happen. However, for Tesla, it's a bit different. Everyone's expecting the stock to take off, and when it does, you should be ready to pump in some cash. Well, let us know what you think via the comment section. Remember to like, share, and subscribe. Stay safe, and see you next time right here on Stacking Stocks.